Hello and welcome to the War Hunt Quarterly Market Update to 30 September 2023. We've seen really strong 12-month returns to the end of September and similar really strong returns to the end of 30 June for the last quarter's review. But this actual quarter itself has been quite flat, which interestingly, we haven't seen interest rate increases from the RBA in Australia or internationally with the Fed. There hasn't been any further interest rate increases. So, Steve, what's been happening in Australian markets and international markets?
Yeah, Sam, we're going to see a similarity around the world in equity markets. As you mentioned, it's been quite a good 12 months return. You see the ASX 300 up by near 12% there, but it's a negative number in the quarter. Now, the market was going along strongly, even with the interest rate pauses. But at the last pause, the Federal Reserve Chairman in the US said that the market has to expect that rates will stay higher for longer, where the equity market was probably expecting we've peaked out and rates will start coming down. So those comments really spooked markets around the world, and all equity markets came off. And so you can see there in Australia just a very small negative 0.8% return for the quarter.
And what's happened in the US in light of those comments too from the Fed?
Yeah, so as I'm sure people know, the biggest driver in the world market is the US at 65% of the world. And what's been driving the US stock market has been the high tech stocks. They've had a phenomenal run since last year. Now, no surprise, they're the ones that have come off the most on the news that the rates are going to stay higher for longer. So the big tech stocks are actually in what they call correction territory. They're down 10% from their highs in July. So that's pulled the US down, and of course it's pulled the world index down, so a small negative return for the quarter. But you'd have to say, Sam, that 21.5% return
It's
for the 12 months is pretty
it's
good.
pretty solid, and just not trying to be stock specific, but the news Apple received recently from the Chinese government not allowing or potentially not allowing iPhones to be sold any further in China has had a massive impact too on Apple's share price, which just talks to the importance of diversification. Like a lot of people have bet the house on those particular stocks, but they can really be very volatile.
Absolutely. And of course, Sam, in a diversified portfolio, there all those stocks are in the War Hunt portfolios as well.
Now, Steve, the emerging markets has been a pretty interesting story. I mean, the emerging markets are really dominated by China, and China's had an extended period of lockdown due to COVID. How have emerging markets performed over the last 12 months to the end of September?
Well, but not as well as the developed markets because of China. So you can see in the chart here, emerging markets up 11.5% for the 12-month period, similar to Australia. And they're just flat for the quarter. But it's all got to do with China, Sam. I think at the start of this year, most commentators were saying now that the lockdowns are over in China, the Chinese economy is going to boom and that'll rescue the whole world. And now they're saying the Chinese economy is still in the doldrums and it's actually going to be an impediment on global growth going forward. So it's certainly affecting the stock market, the emerging markets.
Which sort of almost speaks to no one really knows. Like one minute they're saying it's going to drive us out of the doldrums, and the next it's going to bring us into the doldrums. So the importance of diversification again is sort of is highlighted.
And of course, the long-term approach as well, Sam. You know, at the start of this year, everyone said we're heading into a recession. And then by the middle of the year, everyone's going, it's going to be a soft landing. The central banks have pulled off a miracle and increased interest rates by the most probably ever in a short period of time. And yet we're heading for a nice smooth landing. And then about 2 weeks ago, it all changed back again to go,
Yes.
now we're not sure whether it's going to be a hard landing or a soft landing.
Just in that context too, you've just brought up interest rates. We've been going through a pretty heavy cycle of interest rate increases. We've started from basically zero and now around that sort of 4% mark. The last quarter, there wasn't any interest rate increases. So what's been happening in bond markets over the last 12 months and for the last quarter?
Yeah, we are close to what they call the terminal rate, but we're not quite there. And the bond market is indicating that there's probably one or two more rate increases to come. And you can see in the chart here where we're showing the US 10-year yield. Again, the US is the biggest part of the global bond market as well. And under that, quarter by quarter, we're showing the returns of the global bond index. It's hedged back to Australian dollars. And you can certainly see in the last quarter, it's quite a negative number, down by 2.4%. And that's because those yields keep going up as inflation remains sticky. Oil is up 30% this quarter, which again is pushing up expectations that inflation is going to stay sticky, not coming down as fast as the central banks would like. I suppose one thing that people in bonds who probably having a bit of a tough time over, particularly in 2022. But one thing that you notice, even though the quarter's negative, the year is a positive number, Sam. And that's because bonds are now actually trading at quite reasonable levels, four and
Yes.
a half, 5%. And that's the income you get from the bonds. So that income is now offsetting the fact that the prices are a little bit negative.
And as you said, like we are getting closer to that terminal rate. And if you look at historical averages in terms of the cash rate within Australia, it's set around that 4% mark. So we're really kind of getting back to the new normal, or what was historically the normal. Whilst it's been a bit of a shock to see those increases, we are now reaching a terminal level, and things will hopefully settle down from there.
Oh, I think that's absolutely right. It's a really good point to reiterate as well, is that levels of 4 or 4.5% are sort of the long-term average of Australian rate.
So thanks so much for that update, and thank you for joining the War Hunt Quarterly Market Update to the 30th of September 2023, and we look forward to catching up with you next quarter.